Have a graph of trailing drawdown. So I want to teach you guys how to pass these evaluations because I have failed so many of them, and I kind of figured out a system to passing them. So I want to share that with you guys, and hopefully it will get you guys to be profitable. So you guys down to watch that? All right, let's go ahead and do it. So as you look at the chart here, you can see that every time the black line goes up, that's your account balance, and then the bottom line is the trailing drawdown. Anytime your account balance goes up, it is going to go up with you. And then anytime your account balance goes down, the trailing drawdown stays where it's at, right? So the key to these is to sell into strength. We have been told by every book, every teacher out there, every guru to let your winners run. But the problem with that is price retraces, right? And then if you panic and sell or it hits your stop loss, the trailing drawdown still goes up with your profit. So you have to sell into strength, guys. You can't hold on to winners and let them run. You can with a certain bit, but I never let any profit in a certain trade go over $500. So let's say I have two contracts on, it moves, and now I'm up $500. I am exiting one contract, and then I will let the other one continue up. But with that being said, I still don't want to let it come back against me very much. So I'm very quick, I scalp, I keep my risk very small. So what win rate ratio should you use? So if you look here, you can still have a very modest win rate and be profitable anywhere from 25% to 50%. You're going to be profitable as long as you win half of your trades. So I try to stay in the middle there around 50% win rate. And then I'm taking profits quickly. I'm scalping. I do shoot for a more of a 2-to-1 on the last contract, but the first contract I have, I'm definitely selling it at 1-to-1, 1.5 or so. And that allows me to keep a good win rate ratio and still pass the evaluations. The problem is if you're shooting for a 3-to-1 ratio, the chances of half of those coming back and you not exiting into strength is pretty high. So before we go into the charts and I show you the exact strategy I've been using to pass these evaluations, which is a lot of them in the last month. I've passed 4 or 5, I think. So before that, I want to show you guys Bulenox's discount. So Bulenox is one of my favorite companies because I failed with a lot of other companies and I was feeling like I was never going to pass them. But as soon as I went to Bulenox with their limited rules, like there's only one rule, don't hit the drawdown, that will fail you, I started to pass the evaluation. So if you're feeling like that, check them out. So this sale that they're having is 70% off of the 25K, 50K, and 100K accounts, option 1 and 2. So let's head over to my website and check it out and what other discounts there's going on in the funding space. Companies.com. And when you're on the home page, if you click on this, it will take you to this page. So what this is like the funding companies that I know that I've been funded with and have received payouts from. This is where I put all the discounts. So Bulenox has a couple different options here. They have the 250K option 1 account for only $33. But the activation fee on the 250K account is quite expensive, so I don't recommend going with that personally. But what I do recommend is getting a 50K account or a 25K account and stacking those up. I think it's better, it's easier to pass. So Apex Trader has a 50% off sale, and then they also have a sale for 50% off resets that's going on for the next week. And then UProp has 30%, Tick Trader 50%. Alright, so here we are on Trading View, and it's the ES chart. So I'm going to go over my strategy that I use, walk you through it real quick. I don't know if you're familiar with ICT and who he is, the Inner Circle Trader. He is a smart money trader that's he says he's came up with these concepts, but a fair value gap is a 3-bar pattern. You can check out my second YouTube channel, and I kind of break all these down. I'll leave the link in the description. And please subscribe, you guys. If you're watching these videos, please subscribe so I know you like them and so I continue to make them for you. So a fair value gap, I wait for the indicator I have. It's a fair value gap indicator, fair value gap nephew Sam. I wait for the indicator to paint blue, and then once that happens, I will wait for a blue one to be respected, like that. See how it went into there and then dipped up. So I would enter at the bottom there, right here, and then I would put my stop 2 to 3 points below, and then once price moves my way, I would sell out one here, so that's about 5 points, and then the second one I'll sell into strength as well, so probably would have sold it up here. So that's 10 points, $500. And then this is kind of how it works to keep your risk really small. 2 points, around $200 with 2 contracts. You're gonna be selling into the strength, looking for $500 profit. And as long as you do that consistently and you don't overtrade, the key is don't overtrade, because you're paying commissions every time. Every contract you buy and sell, that's a total of $5. So you take 20 trades, you start doing the math, it adds up to a lot. So you're going to be patient and wait for the right setups to form. Respected it, enter there, sell one here, 5 points, sell the second one somewhere in here. So then you're looking at $600 profit, only risking 2 points. So you guys can check out my second channel. I hope this video helped you guys. The point is, do not let your winners ride. You guys just sell into strength, don't be greedy, and don't overtrade. Those are my 3 tips for you guys. Hope this helps.